All right, so the webinar is being recorded now. We're going to talk about trading in general and trading psychology and how you make money and whatnot. This is not on any particular topic in terms of technical analysis or any such thing. We're talking basically about how you make money and whatnot. So, does everyone see my screen? Now, without thinking anything that you've learned so far, or if you've heard anything from me, forget all that. Just answer this straight. You see this candle right here. This candle right here. What's the first thought that comes to your mind when you see this candle? Buy. Anyone else? Vlad saying buy. Anyone else? Come on, guys, let's make this interactive. Vlad says, or overbought depending on the next candle. Well, that depends on the analysis, but the first thought that comes to your mind when you look at this candle, do you want to buy or do you don't or not? That's my question. When you see this candle, isn't the first thought that comes to your mind is like, oh, can I buy that? Can I enter that so I can make profits too? Right, majority here says yes. Now this is where your psychology comes in. This is the major mistake that every retail trader does. They participate in the market. They never anticipate. When the price is already going up, see, I'm sure everybody's heard of something. Whenever you hear about an opportunity, 99% of the times it's too late. Trading is same. Once you're seeing this candle, 99% of the times the train has already left. Which in this case, this is just a daily candle. And if you're only seeing it now, the train has already left. You've already missed 150 pips. So entering now doesn't give you anything. So this is the psychology part everyone has to be familiar with. You have to think, you trading alone, even if you're trading with $1 billion, you cannot move the market even 1 pip. So you trying to buy here doesn't do anything. You have to move with the market makers, the big guys who actually move the market. And first thing that everyone needs to get out of their head that, oh, if you just do something, you're going to be wrong. If you're always questioning yourself, you're never going to make money. Because think about this, we're not trading stocks. Companies cannot burn or the stock cannot crash overnight. In Forex, the price cannot just do whatever the hell it wants. It's always going to do what the charts tell you. Market cannot move 1,000 pips while you're sleeping or anything. Even news cannot move a market fucking 1,000 pips or whatever. It just doesn't work like that. There are emergency measures, central banks are involved and whatnot. So you have to think, you're trading money. You're making money while trading money. There are security measures and whatnot. Financial banks have to step in. If a country had to be crashed, do you realize there are so many central banks involved? How much paperwork would it take? It's all a big process. So get that fear out of your head that markets can do anything. Even if you're only a beginner, I'll tell you this thing. 80 to 70% of the times, even if you're just a beginner and you're just guessing what the market's doing, 70 to 80% of the times you're correct. But the only mistakes you make is you take profit at 20 pips and then you see the price goes up 200 pips. Or you put your stop loss 20 pips below, then you see it comes, touches your stop loss, and then it goes in your direction. Tell me if I'm wrong. Do you guys agree with whatever I'm saying? So you have to consider all this. When you're trading, your skill and everything else comes after. The first thing is your mind, your psychology makes you money. If you don't have your money, if you don't have your mind over the money you're gonna make, it's pointless. Your mind makes you money in the markets, nothing else. Everything that you do is governed by either desire or fear. And if you're letting your fear of losing money take over your desire of making money, you're never going to make money. You can spend years and years studying, you'll never make money. I'll bet my life on that. If you're letting your fear to lose money take over your desire to lose money, the desire to make money, sorry. So you have to keep that thing in mind. Always focus on making profits. Now, if you're thinking like 95% of the retail traders, they see this, they're like, oh, market's going up, let me buy. And then the next thing, pullback happens. This comes down 40, 50 pips. Everybody's stocks are taken, and all the retail traders are crying that, oh, market's always going against me, this and that, trading is not for me and whatnot. And then the market goes up again. Because they do not think, they participate. So it's all psychology when it comes to making money. I know so many people whose analysis are on point, but they're so scared of being wrong that they never pull the trigger. You'll lose more money by not taking action than you'll ever lose by being in the market. Now think about this. Let's say you bought here, right? Let's say you bought it here. And then you see all these red candles after that. 95% of the retail traders, once this candle goes up, they're happy. They start celebrating. Oh, they were right, whatnot. Then they see a red candle. They start questioning themselves. Oh, should I get out? Oh, am I wrong? Oh, is the market coming back on me? Whatnot? Then they do get out here. Then the market goes up again. Look at the third candle. They get out, market goes up again. Because all that money is gone. Because a lot of people, even at this candle, entered late. And when this was coming down, it was taking all their stop losses, then goes up again. So you always have to think in terms of that. Your analysis is a lot of times correct. But you have to trust yourself. And if you see a price coming up or down, do not just participate. Wait for a pullback. Follow your analysis. Let go of the fear of missing out, or let go of the fear of missing out. There will always be a new setup. Like 2 weeks ago, me and Manny were analyzing. We analyzed it to the last pip, GJ and GU, when it fell the other day, when some news came out, I think. Altogether, it was 380 pips. It was calculated properly, but we were stuck in some other pair, and since the accounts were small, we were on the small account, we couldn't take that. But there's always going to be more setups. So let go of the fear of missing out and fear of losing money. Now, another thing, greed. Every person who trades Forex, I'll bet this, they start by thinking they're going to be rich overnight. It's not some get rich quick scheme. It's a business. It's an investment. Yes, it can replace your job. It can replace any job in the world you have. I don't care, you make $1 million a year doing your job, Forex can replace that. But it's going to take patience. It's going to take a lot of patience. You cannot just get rich quick overnight. You have to be patient with this. It's an investment. Let go of wanting every trade to be a home run. Let's say you have $1,000 account, 1,000 leverage. That's the maximum, right? You have a proper entry. Even with that 1,000, the maximum you would make with a proper entry, dropping 5 lots, 9 lots, $900, 9 lots, 1,000 leverage. You drop 9 lots, the maximum, let's say you even caught this move, this whole thing. 9 lots, 160 pips. How much is that? How much money is that? Can anyone tell me? All right, that's 140,000. I guess people are calculating whatever. That's 1440. So let's say you make that much money. Is that a home run for your life? Are you not going to trade after that? If you catch that move, you're gonna want to make $1 million overnight after that. So let go of that feeling or that desire that you have to hit a home run every trade you take. Trust your analysis. Analyze a trade from start. Let's say you had some analysis to get here, and your original take profit was, let's say, here. Stick to it. Analyze a trade from start to the end. When the market is in this area, doing all this, don't get out starting to doubt yourself. Stick to your analysis. If you're wrong, you're wrong. Who cares? You lose some money. That's part of the business. If you cannot get over losing money, you'll never make money. That's the bottom, like that's the ground rule for Forex. You have to be willing to lose money. If you work a job, let's say you can spare $500. Instead of that 500, trade only 300. Do not trade with the money that's attached to your mind more than to your wallet. You'll never be profitable with that, like that, because you would always be focused on not losing that money. And guess what's going to happen? You're going to end up losing that money. I'll bet my life on this. Look at this EU right now. Look at that. I've been saying for the past 2 hours I want to sell this, right? But look at that. Because a lot of people are participating in that still. So price is going up to trip everybody for in making this appear as a buy. But once, then check the 1 hour. Once the momentum dies here, this is going our way. This is going south. And that's when we're going to enter. Don't have this fear of missing out. You'll always have an opportunity if you're waiting for the market to do what you want it to do. But if you're only participating, then you don't know when to exit, when to get in, or what the hell you should do. So if you analyze a trade here, your take profit is here. I don't know what analysis you did, whatever you did. Let's say this was your proper move. You wanted to catch 400 pips. Now, one thing I'll tell everybody: once you analyze this trade, don't expect it to do it within the hour or within like 5 minutes. Stick to it. If you're on the daily chart, you expect to do a $400 move and you want it to hit your take profit, don't start questioning yourself the next day, because these are daily candles. Let's say you used this much data to analyze, right? Let's say you use this much data to analyze and predict your entry would be here and your take profit would be here. Now look at these amount of candles. That is at least 2.5 weeks worth of data, right? So a rule of thumb, I'm sure everybody knows about the indicator ATR. I know I'm not a fan of indicators, but ATR is something that tells you how many pips the market moves on whatever chart you are. Put ATR on here. It will tell you that how much the market is moving every day. Now, in 2.5 weeks with ATR, multiply that number of candles with how much the market is moving every day. Then you have your idea that, okay, in 2 weeks, market is moving 1,000 pips. So, and your trade is 400 pips. So you should expect to hold this trade for 4 to 5 days. In 4 to 5 days, let's say the price is here, 50, 60 pips away from your take profit. You take that profit because you analyzed with 2 weeks worth of data or with 1,000 pips worth of data or in whatever terms you want to call it. Once that duration is done, it hasn't hit your take profit, don't worry about it. Take that profit. Because that's what matters. Only stay in a trade for however long you analyze it. That's the bottom rule. If it hasn't hit in that much time and you're only 40, 50 pips away, take that profit. Because after that, your analysis is over. Now after that, it's gambling. Because the amount of data you used for your analysis, that is over. After that, it's just gambling. If your account allows or if you're okay, move your stop loss to, I don't know, in profit right here, then let it run. Okay, you want to do that gamble, do it. But the sensible thing to do is take profit at that point. Because you use this much data to analyze your trade, stick to it for that long. After that, it hasn't hit, get out of that. This is why I like to use ATR a lot of times. Like when I know I'm entering a swing trade, I like to use ATR because it tells me how much is that pair moving on the time frame I'm on. So it gives me an idea that, okay, I should expect this trade to be over in 8 hours or 2 days or 1 week, whatever. And I'll stick to it for that long. After that, it's just gambling. You need to get out. So Melani's asking, how do you see momentum is dying? This is something that I teach my private students. I cannot give you the details, but I'll repeat this again. Every candle tells you a story. Every candle. Now let me give you an example. Look at this green candle and look at this red candle. Which one do you think is more powerful? Anyone? Green. Green. All right. So we all see green's more powerful. So that's how you measure momentum. I have a specific way of doing it. I'm sorry I cannot share that, but that should give you an idea that you have to look at the candles. Every candle tells you a story. Another way, if you cannot take your emotions out, remove colors from your candles. Then you'll actually only focus on the data instead of the color. That would take your emotions away. Because now you see red, you think it's going down, green, it's going up. What if I made it all, I don't know, black or all white, whatever? Then you would only focus on the price, right? Take those emotions out. Now, anybody has any questions so far or any concerns that we should address, since this is just a general webinar we're doing on psychology and how to make money. So is this being helpful, or do we want to talk about anything else? Questions, comments? Anything else we should address? Is this making sense? Anyone? Guys, let me know if you want to go through anything else, any other aspect. Let's go through it. Have any questions? Talk. How can we actually outsmart the market makers? You cannot. The simple question is, you cannot outsmart the market makers. That's basically you trying to hold retail traders and play with or like the market makers. Yeah. That's my main concept. I always try to go with the big players in the game. Because me going against them is only gonna end up with me losing money. Because think about it. How can you compete with $200,000-$300,000 and trillions of dollars. There's no comparison. There is no comparison with that. So you always have to move with the market makers. There's another thing I would like to point out. Let me show you guys this little thing. Now, how do I say it? Okay, I'll just explain it. Now, let's say at some point on the 1 hour chart, you see the price going down. I don't care you're using dots or whatever the hell you're using, indicators, but let's say on 1 hour chart, you see the price going down. But the 4 hour tells you that from here, let's say from here, price is supposed to go up. So that's the bigger time frame telling you what the market makers want to do. As a rule of thumb, let's say you're trading 1 hour, 4 hour chart is your godfather. I don't care what you're going to do on the 4 hour, the market's going to do what the 4 hour wants to do. For 4 hour, it's the daily. For daily, it's the weekly. And it goes respectively. So if you're seeing price going down on the 1 hour, but at the same time on the 4 hour, you feel it's going to go up, go with the price going up. 99.99%, the bigger time frame is where the market wants to go. Just think about it. All the retail traders are only focusing in the moment. Like right now, every retail trader is focusing here trying to buy. But look at this bigger picture on the weekly. These guys are looking to sell it from here. Look at that. It's hitting major resistance there. These guys are looking to sell it. And also notice this wick and this. Yeah, it looks like it broke out, but the candle hasn't closed. There's 2 hours for the candle to close, this daily candle. So this doesn't mean anything. So you cannot make your decision to buy yet. Let's say this closes on the other side, actually breaks it. Price is going to come down, give you a retest, pull back something, and then you can enter buy if it has to be a buy. But I see this to be a sell because on smaller time frames, everybody's seeing this as a buy right now. But here, for the big guys, for your bigger time frame, this is a sell. Now, how I'm saying this is a sell, if you know price action, you would understand that. If you don't, I don't know what to say, but that's what I'm seeing for now. So that's a rule of thumb you should follow. That bigger time frame is your godfather. The price is going to do that. Vlad, does that make it clear, or did I answer that correctly? Is there any way to know that price is going to throw a wick? There's not exactly a way, but again, this brings me to this thing again. If on the larger time frame you're seeing price should go up, and on the smaller time frame price is going down, most of the time it ends up like a wick, like this right here. Let me clear this. Because that is basically big boys doing the stop loss hunt, taking everybody's money on smaller time frames or retail traders, whatever you want to call it. Because look at this. Let's mark this. On the daily, this is a wick, right? And for the daily, this was a buy. This had to go up. Now let's go to the 4 hour. Let's see what's happening there. Look at that. For these people, this was a sell. Look at these 2 red candles. They were ready to sell here. So if you just looked at the 4 hour and you sold here, you ended up with this. Look what happened to your sell there. It went against you because you didn't bother to look at the daily, what the big guys want to do. You'll always get burnt like this through wicks if you're not following what the big guys want to do. Does that answer your question? Awesome. Anything else we want to go through? Let's hear it, guys. Let's hear it. The meeting's going to end in 4 minutes. So let's hear questions, concerns, comments, anything else you want to cover. Let's hear it. Let's hear it. No questions, no concerns, no comments. Anybody? How do you trade and draw channels? How do I trade? That's a different story. I'm not really going to talk about that. And I'm sure 90% of the people know how I trade. I only follow price action. My trades are entirely based on price action. My charts are clean like this. You never really see anything on it. Everybody on here knows, Lo, Robbie, Vlad, everybody knows how I trade. And draw channels. Channels, you should take a look at our Trendline webinar. It's on Facebook. That should give you an idea of how to draw channels. Because a channel is basically two trend lines containing the price within, right? If you want to put it in simple terms, that's what a channel is. So you should take a look at that, and that would give you an idea of how to draw channels. Anything else you guys want to go through? Is this psychology helpful? Has it cleared everyone's mind? Does everyone have a better picture now? What to do, what not to do? The meeting's gonna end in 1 minute, so let's hear it. All right, I guess we can conclude this webinar. I hope everyone's having a good day. Everyone made some money. And we'll speak to you guys in the chat. I'm gonna end this now.